Hi, everybody. Thank you, TJ. Brock, how are you? Hugo, Galaxy. Shahab, how are you? Sinatra, Paul Smith, Arena. Thank you. Hi, Shooter. Marco, how's it going? Laura. Hi, Ren. Okay, so I saw Scott sent me an interesting tweet. I'm going to have to ask. Um, Let me share my screen here. Going to have to ask the guys that are experts about it, but it looked like there was some type of match sales, which I don't think has happened in a while. Okay, Scott's awake. Here, let me just show it to you. Where was it? Here. 26 counterparties take 100.9 billion at Fed's fixed rate reverse repo. Okay, so a reverse repo, if I'm not mistaken, is what we used to call matched sales, which is what the Fed does to sop up liquidity. So I don't know if it's unusual or they haven't done it for a long time, or perhaps this is some type of lead into what Jerome Powell is going to say tomorrow afternoon. But I know Shooter doesn't send me stuff unless he thinks it has some market relevance. So I'll ask the team. In fact, who probably knows is Stell. Stell, you around, buddy? Okay.
Hey, yeah.
Hey, but yeah, when they talk about that, is that match sales where the Fed is draining liquidity?
Yeah, basically the Fed sells a security,
Yeah, instead of
takes
buying it.
takes money, yeah, takes money and then agrees to rebuy it afterwards. Yeah.
Yeah, yeah. Do you know if
Yeah.
that's has been unusual during this time frame when they've been so dovish? Is it just a technical thing, or could it possibly be a hint?
I
That,
need to ask my friends. I used to work with quite a few repo traders. I'm not a
yeah.
repo trader myself, so I need to
Okay.
ask about technicality because this is not something that's been very frequent.
Yeah,
It's been,
I didn't
remember, it's
think
been the
so.
opposite for a while. So I need
Yeah,
to ask.
yeah. Maybe a hint on what the presser might say tomorrow.
Uh,
Anyway, I just
it could
thinking.
be a million things. It could be for technical
You're
things, or
right.
it could.
Yeah, it could mean it could mean nothing.
Yeah, I don't
All
know
right.
the answer. Sorry.
That's okay. Thank you for trying. Okay.
Hmm.
And answering my question. So, when I look at the markets the day before the Fed, just in case you don't remember last week and how central banks can have impact on markets, um, all you have to do is look at what Canada did. This one candle. So, you have all this, maybe you have a nice lead, and within less than an hour, you have the biggest range of the day. So, to take new positions on, I may hold some old positions, but to take new positions on and kind of have a time fuse on it, saying, you want to be out before the Fed, maybe not an announcement, but at least a presser, so that you don't get caught up in, these kind of candles where you could throw your charts away. Yeah. Yeah. The grains are definitely been. Yeah, I tweeted yesterday. I mean, and we talked about it with Peter Bookvar yesterday. It's the strongest bull market on the board, maybe as strong as crypto. So you take a look at all the grains, and just look at dailies, and you know here's your wheat. They're all just becoming parabolic here, right? Here's your corn, same thing. And there used to be a war chant on the floor of the Board of Trade. Beans and teens are going to have to come up with something for the 20s or 30s in the beans. I know someone that's thinking before it's over that will have $30 beans. Yeah. So, get ready for higher grocery bills, although I know everyone's already experiencing that. So here's your soybeans. they're already $16. So tremendous move, bull move in the grains, which doesn't bode well for food supply. Look at that. Okay. So beans in the teens, well accomplished. And you know what? One thing that the Fed could raise rates, and I've gone through this with grain markets where we've had drought, droughts, El Nino, La Nina. The Fed cannot print corn, beans, or wheat, okay, to add to the supply. Tightening rates doesn't necessarily mean that you're going to have more grain. And I remember when Volcker was tightening, we did have a bull market in corn. Eventually, it came down. I don't know why. Created some liquidation, but it's hard to control the cost of grain with interest rates if you're going to tighten. Okay, so there's some things that they might have some control on if they slow down the economy, that maybe we won't use as much oil, or perhaps gold doesn't go up because rates are going up and the opportunity cost. But grains, meats, I mean, I looked at meat prices. I'm not talking about at the grocery store, but live cattle and lean hogs and feeder cattle, and it's been such a long time, and I looked at those, and they're astronomical. They never traded at these levels when I had an IB or I was in Chicago on the floor. I mean, it's going to be expensive barbecuing this summer, I think. So anyway, that's that on the ags. One thing that I was looking at last night that was really beautiful was the supermoon. Did you guys watch a supermoon?
I didn't see it.
You didn't? Was it cloudy there?
It is, yeah.
Yeah.
We it was cloudy here, so I didn't get to see it. What
Yeah.
tell
It was just really
make
large.
it pictured in my mind.
Okay. Uh, Moon River, wider than a mile. Anyway, S&Ps, I think there's a possibility for a trade after the Fed, because we still haven't taken out Friday's high yet. See, so I think we did last night. Okay, so we did at 42. Oh, we got to the 42 number last week. So turnaround Tuesday, for a scalp, maybe some people might want to just liquidate in front of the Fed. And remember a discussion yesterday, Blake, that everyone's going to expect something dovish. Last time, all the markets rallied after the presser and then faded. So if you did it and I did it, you think you're going to be able to do it twice in a row and just have the same battle plan of fading the Fed, that maybe you have to have a little short on in here for the Fed. But there are people talking 42.20. Blake, I've heard 43.14, and one of the most bullish wave guys out there is looking for 4,400. So,
Really?
Yeah.
Yeah, actually 4,400 was a number that I heard yesterday as well. So,
Really? Yeah,
yeah,
they're bandied about. Yeah, but I figured there's a trade here. It doesn't mean it, anytime you're trying to trade an inflection point and you do it and it's successful, it doesn't mean it's the top or the bottom. It just means it's a top or a bottom. You don't know if it's going to be the major significant top until time passes. A lot of time.
Right. Yeah, this is true. And I was talking to the guys and gals in the chat room, and one of the ladies in there, she was like, so much for turnaround Tuesday. And I'm like, it's Tuesday before the FOMC. I just can't imagine that the market, even if I wanted to sell, even if I was like, okay, I'm long, I've been long the S&P for, since, let's say last week, I picked it up at 41.25 or so, around the support. Why do you sell? Why would you sell here if you know that Powell's going to be dovish. I mean, if Powell's going to be dovish, and you know he's going to be dovish, now that, and don't get me wrong, this is not, I'm saying he's going to be dovish. You might as well just get long right now. I'm not saying that, but in your mind, if you're like, well, the Fed chairman hasn't shown me anything but being dovish, and that should continue asset prices higher, why would I pull the plug on my long right now? I mean, I know you're up at resistance, and I know that it's overbought, and I know that and Sansi says, the VIX is low, and the VIX is kind of low, and there's a lot of reasons not to sell here, especially with tomorrow. And by the way, I think the whole market is prepared for July, for this summer, for the Fed to start really preparing the market for tapering. That's in a couple of months. I don't think that we should be expecting it tomorrow. However, if he does sound hawkish, that will definitely catch the market off guard because no one expects it. And I think they're very correct in their assessment by not expecting the Fed to do anything. But if when I say do anything, not to even imply or hint or suggest that they're even thinking about tapering. But it is a risk. It's obvious a risk. Everybody's long. Everybody's expecting higher. I mean, volatility is pretty low. I mean, the dollar's weak, so it's all it's all there. I mean, it's a one-way market, and unless we have reason to believe otherwise, I don't think that we should be too concerned with what we're seeing. I am very much in the camp that as long as we are above 4,100, there's no reason to be on the sell side, right?
Yeah, makes sense, Blake.
Yeah, I mean, there isn't. But, what do you do? I mean, I think like if you look at the euro dollar is not going to get, well, I don't think anyway, in my opinion, it's not going to get above this resistance, the highs that we hit yesterday, unless we're following the Fed tomorrow. If you remember the week ahead video, I said, hey, the dollar index is weak. I expected us to hit a new low and then kind of consolidate ahead of the FOMC. And that's what we're doing right now. And the only thing that's going to, allow the dollar to rally a little bit here, or the euro dollar to pull back below the support at 120.50 is, tomorrow with the FOMC being, not as dovish as the market expects. But I do think that's where or what the market is expecting, and probably what we're going to get. Unfortunately, I would love to see more than anything, guys. I would love to see volatility pick up, and I'd love to see the dollar bounce, and I'd love to see equities sell off, and commodity currencies, reverse, because they're all great setups. I mean, you look at the Aussie dollar,
Yeah, it didn't quite take that other high out, did it, Blake?
No, not yet. I mean, this is very symmetrical. And so, there's nothing more. I'd love to see the Aussie dollar trade back down towards the support. And then you'd have to need the confirmation of, equities and whatnot of, breaking down before this could actually move. But, it is extremely symmetrical. And, but the only way this is going to play out is to see equities come down, and they're not. That's been my whole take on whether you're talking about the Aussie, the Kiwi, the dollar Canadian. I mean, the dollar Canadian can't get out of its own way, and it's not going to be able to unless equities start to come down. And that obviously is not the case right now. So, so we just continue to monitor equities. We are really, it's
prisoners.
We are prisoners to the to the equity market rally. When you're talking FX, I mean, FX will not, it's not going to budge unless we see, equities really start to move here. And, but Stelios brought up some pretty good points today, and Stel, he has something that I think he wanted to share with everybody that I thought was pretty important, because if we're talking about a continuation in equity markets, his little chart that he wanted to show everybody probably will make a lot of sense. So, hey, Stel, good morning.
Hello, how are you doing?
We're
talking about the
waiting on the Fed.
Yeah, we're in a holding pattern, that's for sure.
Yep.
You're talking about the commodity prices chart that I showed.
Yeah. So, I mean, let's talk reality. What we want and what we wish for isn't going to happen all the time, and definitely doesn't happen all the time, especially when you want the markets to move. There's an old saying that the markets can stay, irrational longer than you can stay solvent. Well, we have been in an irrational market for, I would say 10 years. Ever since the financial crisis, and the Fed's just pumped a lot of liquidity into the markets. And the only real hiccup we saw is COVID lockdown. But other than that, I mean, you think about like literally the last 10 years. Let's just show you. This is what the market looks like the last 10 years. This is the trajectory. That's due to the Fed and, just providing unlimited and other central banks liquidity. Now, as we continue on in this path of, of massive liquidity and allowing for stocks to rally to new all-time highs, we're starting to see, as Dale pointed out earlier, we're starting to see commodity prices rally, and we're starting to see, not just rally, but hit all-time highs or 52-week highs in a lot of situations. We have daily sentiment index and a lot of commodities that are moving higher. And Stelios had a really interesting chart that will feed into that, especially given the fact that we're probably going to see a dovish Fed again tomorrow, with no end in sight as far as we can tell, as far as liquidity goes. So Stelios, what are you seeing?
Let me take the screen for 1 second, and
you got it.
Just one share. So can you see that this chart?
We can.
Okay, so this is basically commodities change hourly, daily, weekly, monthly. And look at what I looked at was the year-to-date column, so the one before the end. So look at, and you don't have lumber here, which is probably like 100%, right, or something like that. So you have commodities picking up steam. Granted, they have been, they went down on the COVID crash, but this was over a year ago. So this is now year-to-date 2021, and look at commodities picking up steam. We all know they are, and a lot of people are talking about this being the beginning of a move higher. And look at who is lagging, basically gold and silver, and which it's very interesting, because you either if these two are lagging, so you're either in the camp of, oh, they're way too weak, I'm not going to touch them, or they have a lot of ground to cover to catch up. I'm obviously on the second camp, and I think I think they have to perform well, especially if inflation starts picking up. Metals are inflation hedge, or theoretically they're supposed to be an inflation hedge, and historically they've done well during these types of moves. So I found it very interesting to see how they're underperforming everything else. And I am, full disclosure, I'm along both, but I think they're going to start picking up steam.
Oh, go ahead, Blake.
I was just going to say, as an inflation hedge, now, a lot of traders and investors always picked up gold and silver, but do you think some of that quote unquote, no pun intended, some of that shine is taken away by cryptocurrencies? What are your thoughts there? And I'm sorry, Dale, I didn't mean to
Oh, no, it's
interrupt
fine.
you.
I just noticed that, we've had nice rallies in gold from 1680 to, almost 1800, and silver too. And the DSI hasn't reflected,
30 something, right?
yeah, aren't you kind of surprised after a rally like that people didn't embrace it?
Well, they
To me, it's kind of bullish that, went up without people really believing it.
yeah, absolutely.
But,
And I think you're
but I'm
right.
bearish. So.
And I also think Blake is right, because cryptos are now so big in terms of market cap, let's call it, that they matter, and you've had a lot of funds going into crypto, institutional and retail. So there definitely have been, it's a difficult question, because people who really like gold and silver are not going to like cryptos, and vice versa. But you have institutional investors who have gone into crypto who could have gone into metals. So I think that's definitely a good point. And if we do see a considerable move lower in cryptos, like if a Bitcoin crosses below, I think 42, 43K is huge. If it crosses below, then I think we're going to see probably an exodus from cryptos and into other asset classes. Will it be metals? Probably, yeah, and others. So
yeah, I mean, I'm very much in the camp, unless we're proved wrong or otherwise with cryptocurrencies. Like I don't know how whatever the government can do to try to stop the allure of cryptocurrencies, whether they ban them, they make them illegal, they tax the crap out of them. I don't know, but I am definitely in the camp that as the new generation of investors come in, us old dinosaurs, like I'm sitting there, just FYI, I got physical, silver and gold, and it takes up space.
Yep.
It sits there, and it's like, man, it's not light, and they're big and heavy, right? So like, why do I need that? Why don't I just hold Bitcoin or Dogecoin?
It's definitely a lot easier in terms of, technically speaking, in terms of how you hold it and all that. But then again, you hear all these things about, oh, I lost my hard drive, or
Yeah,
it's
people have lost their Bitcoins.
Oh no, yeah. There's actually there's a trader that's in our chat room that he had a really unfortunate, this is early on, like 3 or 4 years ago, mishap with his coins. And I mean, it's a sad story when that type of thing happens to you. So yeah, there definitely is. I think there's safeguards nowadays, but anyway, that's
Blake, with some silver coin bags, you could tie one on to each end of a broom handle and do curls with them.
There you go. Yes,
silver
you can.
Coin bags.
You definitely can. All right.
They are heavy though.
So Stelios, what else are you? I know you're looking at gold and silver. So what are the levels that you're looking at? Because I'm gonna say that if the Fed, is dovish as we expect, we are going to get a sell off in the dollar. The euro is going to trade above 120, 120, and that's probably going to allow gold and silver to rally. So what do you think is looking at the charts, what do you like there?
I think the one I'm really focusing on is silver, and we're currently.
Do you want to show us the chart, or do you want me to?
Sure. No, I can do that. There is. Hold on. Let's go on the weekly, because it looks.
Show us a 1 second chart, please.
Yeah.
I'm joking. Stelios is definitely a long-term trader, but
so basically there's this 26 to 26 and a half, 27, let's say, zone in silver, which we're right in the middle of, which I really like. And I think one way or another, we're going to break after the FOMC, either higher or lower. Ideally, I obviously wanted to break higher, so I'm going to add if we do break higher. If we go lower, then there's there's this ascending line which I'm going to be looking at. I'm trying to be nimble. I'm long some silver from 26, and then I added some at 24.15 This was a little while ago when we dipped. When was it? Last month. I wrote it on the chat room. Obviously, when I was doing it, our members know all this, and so I'm watching this pretty closely. And gold is a little bit different. I think we could see. I drew this a while ago. We could see a drop, maybe towards the low 1600s. But again, I don't know. So this is what I'm watching in gold. Gold, I'm gonna buy a breakout of that. I did buy GDX, which broke out. It looks better on the daily actually. So I bought this. This is gold miners. So I bought this just after the breakout. What was it, 35.60 something? I can't remember. I'll have to check. So I'm starting to accumulate silver and gold longs in terms of I have some physical, but I'm also doing some ETFs, and I like miners as well. So there's a couple of ETFs I'm looking at. But again,
just so you guys know, Stelios is talking about all of this, in the chat rooms. We obviously in the chat rooms we talk about a lot of different things. If you follow us on if you follow us here on the webinars and you're not in the chat room, you're just not going to get our full view of what we're feeling or what we're saying about things. Like if you just listen to this one webinar every day, you're not going to know exactly how I feel about the euro or anything else. If you're just listening to the week ahead videos and you're just now starting to tune in, you're just getting really a small part of the story, because what we do is in the chat rooms is we're talking about charts and different different like the chart of the DAX that I posted, how I feel about the market. Amanda's constantly in there posting her charts and what she's looking at, and so is everybody else. That is where you're going to get our ideas and our thoughts, because I'll tell you, they change quite frequently. I could sit here and be, looking at the euro dollar thinking, the euro dollar looks pretty bullish, but in about 15 minutes, something could happen that could really alter my view of how I feel about the euro and or the dollar. And that's the thing about being a trader, is we have the flexibility of being nimble when we need to be. And so it's more important just that you find a community, whether it's ours or somebody else's, that you have like-minded people that you can trade with. But speaking of gold, I want to mention one last thing before Dale takes back over. And Stelios, I want you to see this. I know you've probably seen this chart because I posted it quite a bit. This is the double bottom in gold, and we're holding above 1760, which is the breakout point. And as long as we're above 1760, we should continue higher. Now, the pennant points to 1804. We only made it to 1800, which, that makes sense. You get towards a big figure number. There's a target there. People are going to sell right at 1800 or ahead of 1800, just trying to book profits. But you notice that we're holding this trend line. And I think this is where it gets dangerous for bulls. Whoops, let's put this here, right here. This is where it gets dangerous for bulls, because if you break below this trend line, some of the support around 1770, then if you take out the 1760 level, this is where things will turn a little bit more bearish if you're trading intraday. But gold, the double bottom points to about 1840 right now. And if the Fed plays ball and they do what we talked about, they just status quo, Powell's continuing to be dovish, then we should see continued dollar weakness and gold should strengthen. Yeah, gold may not rally to 1950. Bitcoin could rally to all-time highs, but gold's probably going to lag because, like I said, it's a different animal now, and it's definitely in my opinion, it's a diversification out of gold and out of silver into cryptos, which is, the millennials and youngers new gold. So there you go, Stelios. Yep. You're like a dinosaur, man.
I am. I'm turning 50 in a few months, man.
I know. Hey, I'm just behind you by a year, so I'll never catch up. All right. So anyway, just some thoughts on gold, and I don't think I'd be too bullish if it dropped back below 1760, 1755, but I think while above it, do you see any reason why you should be selling it here?
Nope.
I don't either.
Yeah.
And this is the longer term 38% retracement, 50%, 618. We still have some distance to travel here, in my opinion. So anyway, those are some thoughts on gold. Now, if you guys want, a full view of how we feel about the markets, remember in 45 minutes from right now, we're going to do the Morning Edge webinar, and that's where we draw out and write up the bias chart every single day. And you can see our, the levels that we're looking at, like you look at the level of support where the euro, we dropped to 2055 today and bounced like a bat out of hell. That's, near that support that we were talking about, which was channel support, which is a rising channel support. So it made sense that we only hit 120.56 this morning. But we fill all this out every single day on the Morning Edge. So I'll see you guys there with Steve and Stelios. Dale, have a great interview. Who are you interviewing today? It's a VIX gentleman, right? Dale? Stelios?
I'm here.
I'm sorry, I was
there you go.
accidentally muted, Blake. Yeah, Jim Carroll at Vixologist, and he said that we're going to VIX it up today.
Woo, that's cool.
VIX things up. So
I've some people had mentioned that they're excited to hit excited for Jim to go today, which is pretty cool. Which means that, and by the way, just so you guys know, the Rand is trying to test previous support. It's a little breakout point. This is pretty key resistance for the Rand. I mean, and this is one of those you have to watch, because once you start getting the emerging market currencies weakening, that could suggest higher volatility. There's your segue, Dale.
Thank you very much, Blake. Good hunting today.
Thanks, guys. Have a great one.
And Jim, welcome to FACE. I'm looking forward to having a discussion with you. Great to meet you.
Hey, thanks, Dale.
So, Jim, I like to start off this way. We all had our own road less traveled, or, traveled a lot. I'm interested in, how you broke into the industry, what you were doing prior, and, some of the steps that led you to focusing on volatility.
Sure. Well, the sad part of the story is that unlike you, I left California after growing up there, high school, college, and a few years after, came east to go to school, wound up in New York, married a Jersey girl, and the rest is history. But other than, losing the geographic battle, I did go to New York, got a job on Wall Street after school, working on the investment banking side initially. Buying and selling used companies is what I used to call it.
Okay.
Did a lot of merger and acquisition work, restructurings, basically just about everything you could do. And it was really at that point that, I actually started to have a little bit of spare change to do something with. And so started to try to figure out what I was going to invest it in. As a function of what I studied in school, I was more value oriented originally. And so I searched around for some mutual fund managers who expressed, value investing. And, that was the original path. Fast forward, I decided to leave investment banking, took a job as the chief financial officer of a company that went public in March of 2000. So I had my internet experience.
Okay. Yeah.
We squeezed it out just as the window was slamming shut. And so that ended up not being the final chapter, but during that sort of internet meltdown, by virtue of being in value managers and taking a value approach, actually was able to navigate that meltdown reasonably well, and had some friends ask me if I would manage money for them. So I got into the investment management business really as a function of surviving the internet meltdown.
Interesting.
And
So you went ahead, was it the registered investment advisor designation back then? They're really,
yes, indeed. I set up
Yeah.
a one-man registered investment advisor.
okay.
When you hear about things going wrong with investment advisors, you have to realize that if you can pass the Series 65, you can become a registered investment advisor and take people's money.
And have
So
no
it's
training.
exactly. So
Right.
it's really not that hard.
Yeah.
The bar is low. I would say that the bar to get in the business is relatively low. The bar to stay in and succeed is a bit higher.
You're only as good as your last quarter.
There's
RIA, right?
there's a certain element of that. You have to. I think you have to decide what your value proposition is going to be, what kind of clients you want to work with.
Yeah. Know your customer.
I have a lot of friends in the business who specialize, who have a niche that they go after, and
Yeah.
I think there are a number of ways to succeed. I ultimately decided that risk management was a critical element of keeping clients in the boat, and began to explore systematic investment strategies, tactical investment strategies, and ultimately developed a set of systematic tactical investment strategies across asset classes that manage risk and do it, with an eye to different objectives. Some of them are pretty fast twitch. One of them is relatively slow moving and therefore tax efficient. And then, back in...
They include using VIX products?
Well, I was about to get there. Back in 2015, this is Blake was commenting on how long the markets have been irrational. Back in 2015, we were looking at the trajectory of interest rates going down. How long can that last? We were watching the market just keep going higher. How long can that last? Well, it's lasted a lot longer than we thought, but I started to look at non-traditional asset classes, right? Because if stocks ultimately get overvalued, if bonds ultimately get overvalued, where do you put your money? And I tripped over volatility and the investment products that had been developed to address volatility, and did a deep dive down the rabbit hole, a deep research project to assess whether there was a systematic approach to being either long or short volatility through those exchange traded products, and have done a little bit of work in that area since then.
Okay. What's the VIX telling you now, Jim? I mean, I know, to me, it reminds me when people are saying right now, just because it's been depressed for so long, that it's broken. And I heard the same thing about gold in 2000 when it was 200, that gold doesn't work anymore. It's just an archaic relic and a nice paperweight for your desk. And now I've been hearing, similar things. And these are people that forgot how many people got buried selling volatility a few years ago. I forget the year, but even some products disappeared.
Sure.
And a lot of equity disappeared.
Now that was February of 2018, what we call Volmageddon.
Volmageddon, all right.
When
yeah.
when XIV, which was an incredibly popular way to short volatility, blew up and disappeared and took a lot of people's money with it.
Yeah. What are you seeing anything now with the market near 4,200? Did you bring anything for us
if I
to
can
look
grab
at
your
and share?
screen, let me.
Okay.
Let me see what I can do.
Okay. Because I interview a lot of people, and a lot of people look at fixed products, and before we reach these levels, I think it's called the the term curve, and that it was more like a carrying charge market where the price of the VIX went up the further back in time, or maybe at least till June or so. And the contention is that to really have a move going in VIX, do you need to see backwardation where the higher price in VIX is in the front month instead of in the deferred months?
Um, I'm can't tell. What can you see right now?
We've got the term structure up there.
Okay, so I want to try to get something else, but yeah, because that's weird.
And they
I'm
all
not-
look to be converging. You could try a new share and maybe that would work.
Hold on. Huh. That's really weird. Oh, hang on. Here we go. Here we go. Okay, now are you seeing
Yeah.
a chart of the VIX? So, if we go back to last year, we had the run up into the beginning of September.
Yeah.
We came back down, then we had the run up into the election, with higher VIX.
Yeah.
And came back down. And, one of the things I watch is just sort of the trading range of the VIX and how narrow that trading range gets occasionally, what John Carter called a squeeze, where the Bollinger Bands go inside the
Yeah.
Keltner channels. Oh, technical analysis on the VIX, you can't do that. Well, but what you can do is you can watch to see when it trades in a narrow range, because it tends to get out of that narrow range at some point in time. And so, what we've seen this year so far is coming off of that November election high. We saw another high at the end of January. We saw a couple of bounces at the beginning of March, and then we've sunk back down. We finally have gotten down below 20 consistently for the first time since the onset of the COVID pandemic.
That February when it was pinching in early 2021.
Yep.
I remember John Bollinger talking about when his bands compress, that the first move out of the bands is not the breakout, but the fake out. So we had that move further in February. If you go to February, we came out of the band, right? And that what you do is you wait until it's back inside, and this is on any product, any instrument. You wait till it's back inside, and that was the real move. So that's a pretty classic example of what John Bollinger teaches when bands are compressing. The first move out of the compressed bands is not the breakout; it's normally the fake out.
And VIX is not necessarily immune from that kind of activity, right? You get a little scare, you get a spook, things calm down again, and then you get the real move. What's interesting is the moves this year so far. The one at the end of January was more pronounced than really sort of the two moves in March. And now we've settled back down, not only at a lower level, but again, back in a relatively narrow range. As the S&P has continued to grind higher.
We're not making lower lows.
We're currently not making lower lows for sure, and so that's something to keep an eye on.
And 19 people were calling it a breakdown when we went under 19 a few weeks ago, and it doesn't look like a breakdown anymore because
Dale, as you know, people always want to call things as soon as they see them.
Or if it's in favor of what they've been thinking, or
exactly
talking their book.
Exactly. In the same way you suggested that the first breakout is a fake out, sometimes the first breakdown is a fake out as well, just in the
Yeah.
opposite direction. And so,
Let me ask you this, Jim. If
yeah.
you were looking for, and I'm not saying the S&Ps have peaked, although I've cried wolf many times in my career, but say, for example, you thought there was a chance from the top
Mm.
of 20% pullback in the S&Ps,
Yeah.
be it 4220 or 4300, wherever it comes in. What would be since you are well versed in these products,
Hmm.
how would you approach can you put on a position trade in VIX and any of the VIX products? And even though you're trading off of it, hold a core without the decay killing you when it's not doing.
Decay is being long volatility at the end of February last year, what everybody wished they had been. But had you taken that long volatility position back in, December or January, thinking that the market was overvalued and its time
Yeah.
has come, you do bleed out, and it's very
Yeah.
complicated. There are
The
really
rollovers.
smart people who spend all day, every day, trying to minimize the bleed of having long volatility exposure. Some people use, way out of the money VIX options as a way to have a hedge on. Some people use the exchange traded products, VXX, UVXY, but those can bleed uncontrollably. They really
Yeah, with
are.
reverse splits and everything.
Well, and the
With
reverse splits
decimating you.
on those products are inevitable.
Yeah.
The reality is that if you look at the VIX term structure, and the
Okay.
futures are what people can trade, they are the foundation for trading volatility. 80+% of the time, the futures are in a reasonable to steep contango, and you want to be short volatility. And short
Right.
volatility could be using a VIX exchange traded product, SVXY. We're hoping to get another one launched fairly soon. You could be long stock. I find that a lot of ordinary investors, when you ask them what they think about volatility, they say, "Well, gee, I don't know. I don't like volatility." And then you point out that their equity portfolio is short volatility.
Right.
It can
Yeah, they
start
don't
to
e-
bring
you
it
don't
home.
even have to mess with the VIX products. You're just long risk.
Well, exactly, and so there are other ways um, to go long volatility. You can short stocks. You can,
Yeah.
and I am not an options expert. There are any number of folks that I talk to who are much better at structuring option trades, and that is one of the ways that you can put on a hedge or a long volatility position and shrink the bleed down. Now,
Yeah.
inevitably, if the market doesn't move in your direction, you're going to suffer the ill effects of
Time
being long
decay. Yeah.
volatility when you really
Yeah.
want to be short volatility. Yeah, time decay.
Yeah.
If implied volatility shrinks and time decays at the same
Yeah.
time, there's not
Yeah.
much you can do. So you're either hedging your
Options can be like
portfolio.
options could be like a lot of relationships. 90% of them expire worthless.
Look, the reality is hedging a portfolio has a cost associated with it. And so you either get comfortable that the hedge is going to allow you to stay with your portfolio, stay with your strategy during times of trouble, or
People
maybe
think
you
it's a
shouldn't have a
waste of
hedge.
money now. Yeah, people are saying people aren't hedging. They're saying it's a waste of money.
Hmm,
Just like it would be like saying not having fire insurance on your house. Why spend the money?
right.
It isn't. You have to have people have a different viewpoint when they think about insurance for, you know, other purposes besides their money.
Well,
And
which is
yeah,
why if you have a mortgage on your house, you will have fire insurance
right.
because the bank's
The
going to
bank,
insist on it.
right. So a lot of people are going unhedged right now. Have you noticed that, Jim? Because they
Um,
feel like they don't, you know, the hedges never pay, which they should be glad about. And that it's affecting their overall return because their hedges cost them money every time they put them on, because except for maybe last year in COVID and there's been a few breaks, it usually they haven't needed it. And even in COVID, if you went to sleep for a few months, you didn't even see it happen.
yeah, I think anecdotally that's the case. What's interesting, again, you noticed on this chart of VIX that as the market has been making higher highs, we are not making lower
Yeah,
lows, which
yeah,
suggests that there's a bid for
yeah,
SPX options in here someplace. We've seen the same thing with VVIX, right? The volatility of
yeah,
volatility, which
yeah,
is the VIX calculation using VIX options. That has remained steadily above 100. It came down in the last couple of days, but so there is some bid for protection um, in the market
You ever
that we
just
can
go
see.
long VIX calls or use verticals, or do you use the VIX options at all, Jim?
I don't use the VIX options. My client base is comfortable with a strategy that uses the VIX exchange traded products, and
Okay.
we will be either long volatility, short volatility, or we can be neutral when the crystal ball is particularly fuzzy.
Okay.
Most of
What
the
is it
time,
now? Is it flashing red to you? You just, you know, I could read through the lines that you talk about market at new highs without VIX making new lows. And, you know, the low last week, that low that it had, like, you know,
mm,
around 15. Did you even see a trade there? I mean, I looked at the candlestick, and who knows who got a trade off that. It looked like a ghost tick to me. I'm not sure many people got longs off at 15 and a half. It was there for a second.
well, and
So
you have to remember that VIX is a calculation based on where SPX options are being bought and sold,
yeah,
and so you can have um, you know some ghost ticks, as you say,
yeah.
when there's some action in the SPX options that
y-
drive
yeah.
that calculation down ever so briefly.
Before silver got going, it happened all the time. You know, it
Hmm.
would open like 30 cents lower for a second, and then we'd be back to unchanged, almost like, you know, someone set up that trade. There were no bids, and, you know, he got long, and then there were no offers, and it, you know, recovered. So uh, some games are played down there, aren't they? Aren't there?
Well, look, the reality is that there are incredibly smart folks out there who have the ability, if they want to, particularly in the options markets, to um, do things that can affect prices. Um, Sooner or later, it's all going to kind of come back to a more normal state of affairs. But yeah, so outliers, I don't necessarily pay a lot of attention to. Um, you
Do
know,
you have any expectations except same as it ever was for Jerome Powell tomorrow?
I'd be surprised if we're surprised
Okay.
by anything he's going to say. I mean, look, he's on pins and needles right now. Particularly, I mean, you guys were talking about the commodities prices that
Yeah.
have been going through the roof. Some clear signs that inflation is starting to bubble up, which would suggest that at some point the Fed has to do something with interest rates other than keep them pinned to zero. But I don't think I'd be stunned if we heard anything tomorrow that changed the narrative that we've got right now.
Do you have a bias on the VIX right here, Jim?
I the bias that I would have is that if we're back in one of these narrow trading ranges, and we've entered one, the tendency when it breaks out of that narrow trading range is for it to move higher.
Okay, so it looks like over 20 would be it doing something right.
Yeah,
Closing there.
Right, and so for that to happen in the next week or two,
Yeah.
would not surprise me at all.
Okay.
We have a bunch of earnings coming out this week that are potentially market moving. Maybe Powell does slip up and say something that gets everybody irritated. I don't know.
Yeah, maybe emotionally with a super moon, the truth slips out of his mouth.
There you go.
I play a song on Twitter, Johnny Lang, lie to me, tell me everything's okay.
Yeah.
I don't know about you, Jim, but I know you're a veteran, and I've never seen so many bubbles and parabolic moves in multiple different unrelated asset classes in my whole career. You have crypto, you have commodities, you have equities, you have real estate. I've never seen speculation run as rampant. You have doggy coin, which was made for a joke that goes up 1,000%. Do you have any vibe about what this environment that we may look back at this as like the roaring 20s when speculation was rampant, or even in 2000, Jim, it was just with .com.
Yeah.
Right, it was just equities and a sector in equities.
Yeah.
Except the whole market went down. Now it's an everything bubble.
It certainly feels that way, Dale. And you and I have both been on the planet longer than most of the people who are participating in these markets today. So are we? Are we dinosaurs, or do we have
call you
perspective?
pops? Do you get called pops now, Jim?
Yeah.
But it's not just your kids. Anyway, Jim, it really was a pleasure meeting you. And I noticed you're not out there selling anything. You didn't even have your RIA website up on your Twitter description. Do you have a website?
We are. I am a senior vice president and portfolio manager for Toroso Advisors.
Oh, God! I've talked to someone from Toroso before. I think.
Yeah. So
okay.
TorosoINV.com, TorosoInvestments.com is the home of everything we do. And we have a three-legged stool at Toroso. We have a more or less traditional wealth advisory business where we work with high net worth individuals, and as well as a fair number of retirement plans. We have an investment management arm that runs separately managed account strategies and does a big OCIO business, outsourced CIO business.
Yeah.
And then our third leg is a business called Title Solutions, where we work with people to develop and launch exchange traded funds, and advise and trade for those. So our business has been growing very nicely over the past couple of years, and we think those three legs fit very well together.
So this is where you could find Jim at Vixologist, and you don't have Toroso a link for you. So what's your minimum account that you personally can accept, Jim?
It will vary, but it's typically $500,000.
Okay. All right. So it was really a pleasure meeting you, Jim.
Dale, I wish you my pleasure as well. You do great work.
Oh, thank you, buddy. And when you survive an interview with me, you're now my trading warrior brother. It's like the mafia, Jim. You can't leave. All right,
Don
buddy.
Pinkert.
Yeah, just call me the Godfather. So I've been watching it over and over again this week. Anyway, so thank you so much for giving us your time and sharing your journey with us, Jim.
Sure.
It's been a pleasure talking to you today.
Very happy to do it. Do it anytime, Dale.
Thank you, buddy. So that's a wrap, everyone, for Turnaround Tuesday. We'll see you tomorrow for Fed Day. Remember, you could throw your charts away during the presser. So better, prudence over valor when it comes to central banks is my philosophy. And we'll see everyone tomorrow. Good hunting, and don't just count your pips or your VIX, count your blessings, and we'll see everyone tomorrow. Adios. You're very welcome. People are thanking you, Jim. So get a hold of Jim on Twitter, and maybe there's something you guys could do together. Okay. So that's a wrap, everyone. And you could join the team in 15 minutes for the morning edge. And I think the edge is pretty sharp today. So we'll see what happens going into the Fed tomorrow. That's a wrap. Adios, everyone.